Let's see. In terms of, let me move on to the next slide. Let me just, yeah. Okay. This disclaimer slide is something that is, I have to say that because I have made almost every effort to make sure the accuracy of information, but regardless of it, you just need to do your own due diligence, and please speak to the bankers, because sometimes at the speed and the pace that I talk, I think each of you may have your own credit concerns and your, in terms of risk appetite, so you have to do your due diligence. What am I going to talk about today? A little bit of the challenges, the market reactions, how the developers, what is the outlook, and their opportunities. These are some of the things that we will talk in the next 1 hour or so. Let's look at the challenges faced by the market last year. Yep, we know we had so many things. The Israel-Hamas conflict appeared from nowhere. Nobody expected. Ukraine-Russia war has been for some time. Yes, and the slowdown in the economy, persistent inflation, interest rate has been on the upward trend, and these were all the challenges that in the real estate market persisted. And yet, how the developers reacted, how did the consumers reacted, how did the price perform in terms of price increase is all what we are going to discover in a couple of moments. And one of the key things in April 2023, that was the last one of the major cooling measures the minister announced, and he was very, very concerned about the foreign interest in the residential property market in Singapore being very strong, and he felt that if it is not tackled, the property prices will go up too high and it may not be good for Singaporeans as per se. So one of the key things about that here is this: he truly increased the ABSD, not only for Singaporean buying the second property to 20%, but if you look at it, this slide, for foreigners in particular, buying from 30% to 60%. In fact, it looked like a sledgehammer until the brains just break and split out, because I think it's almost insane for anybody to pay 60% of taxes. And how is the outcome? I will show you some statistics to say, has this worked? To an extent, yes. Protecting Singaporean. Okay, elevated interest rates, you know, since January 2022, and then we look at here January 2023, from 3.83 all the way went to 5.825 bips. But I think in terms of the increase in 2022 was a little bit more heftier, 75 point base, but eventually when it come to by 2023, there's been more of 25, and the last hike was on 27th July. Okay, so what does it mean? What happened from July until now? We are talking about a good 7-8 months, and there isn't any further federal hike. In fact, on the 22nd September, this article, Federal Reserve meeting, pause on no clear indication of rate cuts. But we are not so sure whether there will be a rate cuts or not. But in 1st November, another meeting, you know, every 2-3 months, the Federal have its own meeting. And should they bring down, or should they bring up, or should they increase, should they pause? The policy still in place in view of high inflation. That's as recent as 1st November. So, but there are some indication that there is possibility that the interest rate may be lowered in the later part of the year. But let's wait and see. Okay, housing inventory. Now let's talk about what was the stock that we are talking about. If you look at it last year, there were fewer launches here, 7,000 in the last bar chart. Definitely is higher than 2022, from 4,528 to 7,551. But in comparison to many of the years of 2019 to 2021, 11,000, 10,000, 10,000, definitely fewer launches took place last year. But what is important here is this: maybe if we look at it in terms of the what is available right now in the market. Look at it. So right now the unsold stock is about 16,000. 929. But what is very interesting that we need to understand here is this: what is the unsold units as at the end of last year in the core central region? We have got 5,932. RCR have got 5,000, and OCR is 5,000. Actually, it sounds like very good, right? It's such a very balanced unsold units. Every of these area have got 5,000 plus kind of unsold units. But the truth of the matter is, it's not just unsold unit in terms of 5,000 plus. But I've also indicated here, what am I showing you here? The average annual sales over 12 years, the demand in the CCR was only about 1,500, but in RCR the demand was 3,000 and OCR the demand was 6,000. So what it means here is this: the take-up rate, the current supply in CCR, the 5,932 units, on average it will take about 3.92 years, another 4 years supply, but RCR is 1.36 and OCR is 0.93, less than 1 year, because the demand in OCR, a lot of HDB upgraders and so on, so the demand is high and the supply is not there. Why am I trying to highlight this here? Is so that you can understand how the price will play out in this year and subsequent year. Okay, so let me see here, and yeah. Okay, so increase in GLS residential supply. GLS refers to government land sales, and the government has been increasing the land sales because understanding the strong demand, basically the government want to manage that the price is stable. Okay, so that's why we have got an increased supply of government land sales. And look at the HDB side. The government have also introduced, in terms of 19,600 BTO flats, I mean, all in all, we are talking about 100,000 BTO flats. How will these have got impact in 2023? Okay, all in all, in across the three exercises, there were about 19,600 that is being scheduled for 2024. So with all these things happening in the background, how did the market reacted in 2023? Before we talk about market reacted to 2023 towards the tail end, I just want to give you a little bit of an overview of the real estate market since 1997 to all the way to 2023, which is a good 26 years. And I think why I want to do that here is I want to give you a better understanding of the current market. Look at it, how we wish we have got another Asian financial crisis so that we can buy the property at minus 40%, or we experience another .com or SARS like in year 2002 and 2003 when the property prices dropped 20%, or how do we experience another Lehman crisis, global financial crisis, where property prices dropped 25% in just 4 quarters 1 year, and the last round of cooling measures in year 2013 over a period of 4 years, it brought it down to 11%. But what has happened? Things has changed right now. Even if you wish, ever since the how many round of cooling measures, this orange bar in July 2018, 2021, 2022, how many cooling measures government have introduced? However, the market has been resilient. It has gone up by 9.6%, 3.4%, 28.1% even after the COVID. COVID was in year 2020. How come only go minus 1%, minus 0.7%, minus 0.2%? But the market has been going positive with the last quarter, October, November, December of 2023, with a price increase of 2.8%. Then the main thing that I'm trying to tell a story out of this huge slide here is this: the market today is different from the market it was during the previous Asian financial crisis, .com, and as well as global financial crisis, because the government have put in place many measures. Therefore, in today's market, we don't see many speculators, because today, you know, all the buyers are subjected to TDSR, total debt servicing ratio, additional stamp duty, solemn stamp duties, loan to value. In the past, we don't have. So in the past, in the Singapore market, it was hugely speculative. But right now, ever since all the cooling measures are put in place, the current market here is very much people who can afford can only enter the market. And that's why you cannot expect the real estate market to drop by 20%, 40% or 25% unless it is a catastrophe across global or whatever, something happened. Okay? If it is not, we are expecting a very stable market. Okay, how we performed last year, here is this, you can see year 2023, the overall property price index went up by 6.8%, landed property went up by 8%, non-landed went up by 6.6%. But that's why I need you to understand why we always want to highlight this here, my friends, for you to have a good understanding of this thing is important, because you see, CCR refers to areas of District 9, 10 and 11, Coast Central region near town, and as well as the business financial district of the Marina areas and so on. And then you look at it in terms of RCR is the outskirts of the Coast Central region, is the Balestier, the Novena up to Eunos. And then the OCR is outside the Central region, which is the Choa Chu Kang, the Woodlands, the Tampines, wherever it is. Why am I trying to highlight to you here? This is important for you to understand, because at the end of the day, in terms of the price, it is not the same how the market react. Therefore, if you look at it, you see, the OCR, the property prices went up by a huge 13.7% because the demand was so strong. Remember, I told you the balance sales are each 5,000, 5,000, 5,000, but OCR demand is 6,000. So the prices went up hugely. And look at it in terms of the RCR, the prices were only 3.1%, and Coast Central region, because of an oversupply, it only went up by 1.9%. So you need to understand the real estate market react differently from different sector. From here already we can say for last year, even though overall went up by 6.8%, OCR went up by 13%, RCR is 1.9%, because the available unit demand and supply will dictate price. That you need to understand. But one of the things, have the cooling measures made a huge difference? I think yes. If you look at it in 2021, the property price index went up by 10.6%. 2022 was 8.6%. Last year, 6.8%. Okay, so has it dropped from the last 2 years? Yes. Thanks to all the cooling measures being put in place, put a check on the foreigners, overall, it has more or less a bit more stable. Okay, just to give you a little bit of a price difference, this is stabilizing prices of new project sales. We are just comparing year on year. If you take the prices from last year January to this year January, year on year, you can see the prices has moved up, not hugely much, because it has moderated because of the cooling measures in September last year budget and April cooling measures. The market has just had meandered overall plus minus over the other side. That's why the market has not moved hugely. So we are talking about year on year. We are taking the January price here in year 2023 and you compare it with January of 2024. Okay, so you just take, so the market, so what does it also mean? The market in the last 1 year has been relatively stable. So it is not run away, it is not dropping. Does that allow people to come in and enter the market in a stable environment? I think it does help. Okay, moderation is private home sales activity. You can see this particular, the last March chart, the purple is resale flats, the green is new launches. Last year, 19,000 units sold, but if you compare it to, in fact, since 2017 is the lowest number. 2017 was 25,000, 22, 19, 20, 32. After COVID, everybody was trying to right size and take advantage. And then last year it has more. But it is not the lowest. In 2014, 15, 16, 2014, 15, 16, we experienced 12, 14 and 16,000 after the major cooling measures were announced as well. Total debt servicing ratio, when the speculators were out, removed from the system. Okay, so now we come and hear this. How about foreigners? Because of the 60%. Therefore, but you must understand, foreigners, the 60% was only introduced in April. Therefore, the 1st January, February, March, the foreigners didn't pay the 60%. But however, if you look at it, overall last year, foreigners 603, one of the lowest. If you just take from year 2010 or 2015 or 20 in the last, one of the lowest. And you see in 2010, foreigners comprises about 13% of 29,000. The base is already very high. The overall was 29,000, and yet we had 13% foreigners. Here now you look at it, the base is already small. The overall is only 16,000, yet the foreigners purchase is 3.7. Yes, 2021 was 3.8, but 3.8 of 28,000 is much higher number, which is 1,087. Here only 603. Okay, so foreigners are shying away from entering the market because of the taxes, and which means developers are more sensitive to the pricing because they're hugely dependent on Singaporean and PR. So this is how it illustrates. Look at it. For example, if you look at it, first column here where my cursor is 2010. Singaporean only purchased 69.9 plus permanent resident 14%. All in all, it's only about 85%. Okay, 84%. In fact, 69, 70, 84% of purchases in 2010 was Singaporean, but today look at it, 96%. Singaporean and SPR to the extreme right, 96% are all Singaporean and PR are the one who are purchasing. Okay, so this is how the market has shifted, and I just want to highlight here something. HDB, I'm just giving you a little bit of a glimpse how the market will react. 2011 and 2014 during the Mabo Tan's regime. Sorry, Koh Boon Wan's regime. Okay. 2011 to 2014, HDB ramped up 100,000. Okay, and this is to help more people to get a direct flat. And why am I showing you old time history? Because right now it's repeating again. 2021 to 2015, HDB plan BTO supply 100,000. Same, previously was 11 to 14, now it's 21 to 25, 100,000 BTO flats. All these things are HDB. I've released this information. Why am I trying to say here is this? When HDB increased the supply, and why HDB have to increase the BTO in a way, because the HDB properties have moved up hugely over the last 3-4 years. The index has moved up from about 130 to almost 180. And that's exactly, do you remember when I show you 2021 to 2014 when HDB ramped up 100,000, what happened to the HDB prices? Negative, and slow growth, because there was a excess supply of BTO flat as a choice. And then the market started to pick up in 2020, 2021 was 12%, 2022 was 10%, last year was 4.9%. The market started to move. What have the government announced? Another 100,000 BTO flat. Why is the government doing this? Because the government want to ensure HDB flat remain affordable for the next generation, and the prices don't go up too fast, too high, double digit, because it is not sustainable. Okay, so HDB prices, you can expect it to have muted growth. Okay, volume of transaction last year 2023, 26,735 flats were sold. Not that bad. In fact, if you compare it from 2011 all the way before after COVID, the 26,000 is still higher, except it is slightly lower than the last 2 years. Quarterly, every quarter got more than 6,000. I would say HDB is a very stable market. Okay. Quickly, we are talking about rental growth. Overall, private residential rental growth was 8.7%. This is a huge drop. In 2022, it was 30%, 29.7 versus 8.7. So 21% lesser growth. Because why? More new properties have been TOP'd, there's more supply, things have stabilized. Foreigners who have come in after COVID have come in to take up the premises, so market is a little bit more moderating, but it's still on a higher growth last year. Okay, home rental across all regions, if you see, in fact, year on year since December 2022, which means to about the last 13-14 months, is there's been a positive growth in RCR and OCR about 3 to 5%, but in the core central region, the Orchard Road area, it has in fact minus $5.53 from the $5.59. So it's a minus 1.1%. Okay. Good. While we take a short break, as we have got 200 of you, and somebody was starting to spread some rumors that my PropNex CEO, referring to myself, that I have gone crazy. And they started to send out this rumor, and a lot of people started to call me. They said they received a message, my CEO has gone crazy. Actually, they were referring to this campaign. And for those of you who are consumers, you can always, if your agents have not given you the link, you can take advantage of this and take this QR code, because I'm giving out 100 air tickets. 100 air tickets. March, April, 10 tickets to Osaka. April, 10 tickets to Osaka. Seoul, Korea, May, June, 10, Tokyo, July, August, Melbourne and Paris. So every cities I'm giving 2, and the first draw is going to take place, I think, in next month, in March. If you register, take the QR code. If you miss Osaka, you can always go to Tokyo. If you miss Tokyo, you can always go to Melbourne or Paris. Okay, as long as you didn't get a chance to win, we will roll over. Okay, this is just a little bit of a break for me, because I want to take a break. While I allow you to take your QR code, I'm just going to take a little sip. Okay, let's move on. Okay, beautiful cities meant to be places to go and visit. Okay, this is the fly with us. Any final person who wants to take the QR code, very clearly I've given it to you. Don't miss this opportunity. Register. Next. Now, let's talk about how developers reacted in 2023. Okay. One of the key things here is this: developers came up with very sensitive pricing, I must say. Except there was some, you can see Hillock was 2001, Lentor Hill was 2001, Pine Tree was 2.3, Blossom was 2.4. Jaden set a new record because it is in a mixed development. Watson House was 3,002, but it was still very well sold. Then if you say, hey, are these prices right pricing? But when we look at it, why not? Tembusu, 638 units, 378 units has been sold as of end of January. 59% sold at an average price of 2,473. Blossom by the Park, 83% sold at 2,445. Then my question here is who are these buyers who are coming to pick up the units? Look at this, the reserve resident, 91%. 671 units were sold at 2,490 average price. So are we saying while listening to this seminar all these people were crazy, or what is it that they saw something that we didn't see, and why? So I will try to explain more. Lentor Hill, 75% sold, 451 units were cleared at 2001. Grand Diamond, 620 units were sold, launched in July last year. And just to mind you, July last year, the cooling measures was announced in April last year. So this is with the full understanding of the cooling measures, with foreigners cannot buy and so on, and yet the take-up rate is 620 units. And then we had Jaden was just in November before Christmas, 2,475. In fact, this was the record price for OCR outside the never in the history we have done for 2,475 average. Look at the crowd. What is it these people saw that there's something exciting there at that price? 329 units were sold. Yes, and developers were very cautious in the bidding last year. Generally, developers didn't overbid, and people were very conservative in many of the land plot, also because of the new ruling which was introduced last year, which is called as the harmonization of the GFA. I don't want to bore you with this. I just want to say, when this new land that took effect from bidded from last year, 1st June, when they are launched now, the developer cannot sell anyhow. The aircon latch and big balcony and so on, all these things are all to be counted as part of this. Last time they make it as an sellable area. Now all these things will be accounted for, and as such, the developer sellable area will drop by 6 to 8%. So they're very careful in how they bid the land prices, because, in other words, in simple layman's term, before this definition, the developer can sell another 6 to 8% of the development, just creating a big latch of an AC latch or balcony. Now they can't. Okay, so this is how it means. Okay, very quickly, if you like what we say, if you want more reports, if you want our monthly private new home sales, we just updated last week, and residential report or shop houses report or office report or landed property or GC, whatever it is. All I'm trying to say, you just need to be a PropNex friend and you don't need to pay money, and you got some videos and some whatevers, and I will just update you. You get free report. Basically, we encourage you to be PropNex friends in order to benefit huge amount of knowledge base. Okay, so this is something on the last slide before I go on. If any one of you who still want to take, you can take a normal commercial. This is my last, and I'm going to continue with the second half of the thing. Okay, now we are all going to talk about 2024. Okay, what can we expect in 2024? Definitely, we're expecting economic recovery based on GDP and based on some performance improvement projected in the second half of 2024. Federal Reserve may, I cannot guarantee you, introduce rate cuts possibly in the second half of 2024, because in the last 7 months they have not increased. They're just monitoring the market. But one of the things that we cannot escape is inflation in 2024. With the increase of GST, cost of material, cost of labor, everything is up. Okay, so this is what we meant by economists in MAS survey. Even though they cut growth forecast, but economy expected to improve. Year of Dragon said to bring new hope for Singapore economy. People are generally relatively upbeat, but it's for us to see. Singapore growth set to improve in the second half of 2024. Economic growth to pick up pace in inflation to ease after GST driven rise. So these are all, we are just taking facts and figures from different reportings and things like that, be it an release by MAS or whatever. So generally this year we think it's going to be slightly a better year than last year from an economy perspective. Next, federal rate cuts expected. Federal holds rate study indicates 3 cuts coming in 2024. This was in CNBC. Whether it eventually materialized, we are not so sure. US federal holds rate steady signals 3 cuts ahead in 2024. This was all in 14th December. So we don't know yet. I cannot promise you. But the point here is this. Interest rates may, but can you imagine? So my point here is this: developers are sensitive to pricing. Interest rates come down, assuming if there is further cuts, and as well as economy improve, what will happen? Demand will increase, prices will still hold or go higher. Okay, so key rate gives no hint to start to cuts yet. That was as of 31st January. This is just to give you a glimpse. If you look at it, more than 1% drop in interest rate. If you look at it extreme right in rate, DBS, OCBC, UOB, all the interest rate beginning of last year in January was above 4%. If you want to take a 2-year fixed loan rate, 4.25, 4.5, 4.3. But look at it, by December last year, 27 December last year, the bankers have all reduced to 3.2, 3.1, 3.2, 3.1. So the difference, can you imagine? More than 1% the banks have reduced if you choose to walk in and take a fixed rate now. Why? Even though the federal interest rates haven't dropped. Because the bank knows eventually in time to come, they want to lock you in at 3.2% for the next 2 years, when there is a high probability the interest rate may even further come down. So this is a positive news, because at least you are, but last year when they entered the market, people know in January or February, when you come and listen to my talk, the interest rate was 4.5. 4.25, but today is a different story. So that's why there are opportunities in my view. What are the factors propping up new home prices? Because inflation is still there, cost of material high, labor costs are high, supply chain disruptions are still there, land prices are still firm, and harmonization that was introduced from 1st June last year, GST has increased. Therefore, we think even if you wait for 1 more year, 2 more years, hoping the property prices will come down based on this fundamental, we don't think prices will come down. The only way a property price come down is there is a huge economic correction, a collapse of some system, or some catastrophe that is beyond you and I can think of right now, but may happen. It could be another COVID, it could be another something, so we do not know yet. Okay, but without that, If everything goes fine, we think the real estate, the new home prices are expected to remain resilient. Okay, so firm new launch prices expected in 2024. A lot of things, but basically these slides is basically what we are trying to say here is this: the average new launch prices are expected to trend above $2,500, which 2022 was 2285. Same thing for OCR in 2022 was 19, but we projects are expected to hover above 2001, which is almost in line with last year's price. Last year already we hit average of 2519 and 2146, and we are not expecting 2024 to be any lower, if at all marginally higher. Okay, so what is our prediction of the property prices increment? Public housing last year was 4.9%. This year we are expecting public housing 4 to 5% forecast, PropNex forecast. Private property last year was 6.8%. This year I'm a little bit more conservative. My forecast is 3 to 4%. I think because of the current conditions and supply biases, it's a bias market. So the developer cannot push the price too high. So we think it's a very stable market, but at a very moderated price growth. Okay, so these slides basically is giving you one indication. Okay, if at all if you focus on the so many things, if you were zooming in and out while I was talking, at least I want you to just help me to hear this. What it shows here is this: if you're buying a property today at an executive condominium, you know the average condominium price exceeded 1,500 for Lumina just launched this year. So you can't expect last year's price 1350 or 1150 or $800. There's a history. So the recent latest launch is 2005. You will expect this year to be anything between 15 to 1550. If you are lucky, one for some of the leftover unit, bounce off unit, second floor unit, one for, but seldom you will get it. Look at OCR new launches, 2000 to 2003. And you know, I said most of the new launches are 2001. But if you are lucky, the developer, like one of the new launch, they're going to Lentoria or so, going to start the launch at 1,900 XX. These are just selective for attract people. That's why new launches, sometimes you go, you will benefit. Okay. Next, RCR is going to be 2004 to 2008. Average is 2005. So when you take in between somewhere here, you know you will not go hugely wrong. This is just to give you some indication where the price points are. Now I want to share with you something that many of you may not heard. Thank you so much for keeping pace with me for the last 40 minutes. Now I've got more than 230 of you. I'm going to give you something, a glimpse of it, because sometimes we always look at the big mega project and we get excited. What about the opportunities and boutique projects? So we did some research study and we say some of the advantage of boutique projects are it gives you a freehold tenure. And is that exciting? Trust me, as part of a legacy plan, freehold tenure is definitely a plus point. Okay, if you have a big project and a freehold, good for you. But why freehold development tend to be small in size? Because all government land sales can only be 99 maximum. Government cannot sell more than 99. This is passed in Parliament, gazetted. So the freehold land are the old development that has been demolished and rebuilt. So they are very exclusive. Most of them, some of them are quite centrally located, and you have a privacy because they are small in size. Okay, mass condo project versus boutique projects. Both has got its advantage. Tenure, okay. More often you will see boutique tend to be freehold, but I'm not saying that large projects don't have. Few, okay. Facilities, good. Large projects got more facilities, okay. But it also comes with higher maintenance fee. Make sure if you got more facility, you go and swim at least twice a month. If not, you're paying for other people to swim, okay. Boutique projects, you may have a swimming pool, but not big enough, okay, or may not even have. Exclusivity, yes, sometimes a bit crowded. This is, you will have 50 owners, 70 owners, more exclusivity and privacy. Less competitive to sell and rent. You know why? Sometimes you buy a big project, TOP, at the same time you collect the keys, and suddenly out of the 800 owners, 151 to rent. Everybody want to rent at the same time. Okay, a smaller project of 50, you won't have that many. Even if there's 10%, you got 5 of them. Okay, so these are always the thing that you need to be aware of. But we did a study, new launch price difference of boutique projects versus other projects. So what we did here is this: we took some of the projects, you see, the new sale average price of Hallmark 32 units, Booming and Atasia at last year. Okay, so the new sale average price was all about 2086, 2065 versus the average new sale price of the district. Therefore, I take the entire district 15, all the new launch prices 2426, 2426, 2426. But what is the discount? Therefore, what am I trying to say here is this: boutique projects, developers tend to give a discount, even though it is a freehold. Bharat freehold, you're supposed to have a premium 20%, 15 to 20% premium, but because it's a boutique projects, developer give discount. So at entry level, you may be able to buy at a better price. But this is based on past study, but you need to compare and understand. Next things, sales performance of boutique projects. Are you worried that, hey, boutique projects will never sell? Look at it. Royal Hallmark, 32 units, 100% sold. They win by May 22. Average price unit in 202145, 100% sold, 8376. And yes, development still get sold out over time. Sales performance of boutique project. What is this? I'm trying to have average resale price growth of boutique projects. So what we did is we took some of the project study, year of launch, and the different district, whether it is district 12, 13 or 15, and the status is freehold at 99, and the average launch price and the current resale prices. So who said they don't go up in price? Yep, even though they are small, they could be what? But eventually keeping pace with inflation. This was last year's sale price. And how much percentage change, and what was the annualized? I mean, every year for holding, they have been enjoying about 5% return. It's just growing and growing. Past boutique project prices have grown at an average of 5 to 6.5% annual growth rate. Therefore, it is not hugely right to say nobody will buy boutique project. Then what happened to all these projects? I'll give you more data. Okay, so average resale profitability for selected boutique development in 2023. So I took some of these boutique projects in either district 10, 14, 15, 18. Freehold one is a 99, and the number of transactions 6655, because to understand, to start with, some of these development do not have huge number of units, but 56 could be 10% of the development could have been sold in the resale market, and the profit they make here is either 200,000, 138,000 or 500,000 or 495. Okay, this is the average profit of all the 5 owners' profit, divide by 5 and how much profit they make. So even boutique projects do make profit. It is not something people will not buy. And then I'm just trying to say to you, resale performance of condo by development size, right? So again, we are talking about, okay, now I'm showing you boutique development 1 to 50, 51 to 100, 101 to 300, 301 to 800 large projects. And I'm just taking of, let's say, the number of projects. We're just doing a study of District 5 because we choose a District 5 because there's one beautiful development is coming out in District 5. Hillshaw, if I'm not mistaken, if I said it right. And that project is definitely a freehold project, and it's a boutique, it's 51 to less than 100 units. But I'm just giving a glimpse, the number of projects within District 5, if you go and buy, of small, big and large, these are the number of units. And what was the sold price, the lowest and the highest, and the average price sold, and number of transactions. So even though it is number of transactions of a smaller development, only 15 projects got 23 units sold, 24 units sold. This is 350, but look at the thing, 20 projects of 300 units. In fact, the next slides will give you the percentage. So what we did was we took the number of units per project, average number of transactions per project, versus the against the size. Therefore, actually, the boutique development have that 6.8% success rate of being sold last year versus 3.2, 3.5, and 3.2 for the large. So it is a myth for people to think only big projects, the resale market have strong demand. The smaller projects, there is no buyer. Because I think all these data statistics was PropNex research together with the URA realists. We retrieve it to understand boutique projects. You do get a discount at the entry because the developers sell it at a better price. You have a freehold property. Over time, it keeps pace with inflation, and there are still transactions, and you still be able to make some profit to get out of the development. These are all some of the research that we have done. And resale performance of condo projects in district. Just now was district 5, right? Now we did another study of district 15. District 15, because the Telok Kurau area and so on, there are a lot of landed properties that was converted to become apartments. That's why there are more, 142. Again, when we look at the highest price, sold is 2266, and the average is 1529. And at the end of the day, the number of transactions, look at it, 222 units in the boutique development was sold last year. So who are these buyers? In fact, the 222 and you plus the 125, the 347 is almost about 45% compared to the bigger development in District 15. So people do buy. And then when we do the same thing in terms of percentage, actually, do you realize at the end of the day, the smaller development had an average higher transaction, 10%. Because the average is only about 28 unit, 2.7 unit per project. So 10% have been sold versus the big development only 2.8 project. So I mean, this is just to clarify the myth, because some people has always been concerned and worried. Hey, Mr. Ismail, should I ever buy a small project? Will I be stuck? No, there are buyers. Especially if it is freehold, there's a strong demand because it's part of a legacy planning, and freehold preserve its value, and because you enter at a reasonably lower price at entry level, and you will be able to make some profit. So anyway, so today, as I want to sum up for my presentation, what is this? This is one of our in channel. You get a lot of bite-sized information. Kelvin Fong once in a while, me, but mostly Kelvin Fong will give you some. Actually, you can take this QR code and link it and be joined, and then when you can hear very fast, you get within 1 minute, 2 minutes, you get a lot of information. You can just do that. But as I want to wrap up, all I want to say here is this. Thank you so much for keeping pace with me for the last 1 hour, 241 of you to be exact. Really appreciate that. And I know come this Saturday is your Chap Golmi. As you celebrate, as you understand the real estate market, please talk to any of my PropNex salespeople to have a better understanding, clarifications from any of the slides. And my focus today here is this: 2024, the real estate market is still a buyer's market. Real estate market prices are not expected to come down. Probably second half, the demand may be stronger because interest rates may come down. And because of that, developers may price upward. We do not know based on demand. So next 6 months to 4 months, stable market. Is this a good time to reorganize your portfolio, sell and upgrade or buy? Maybe yes, because it's very stable. But whether should you really do it, you must understand your own needs. You cannot just blindly jump into it. Talk to a PropNex salespeople person. They have their business and sales suites and an app to show you and help you and guide you along. I may pause here if there's any questions anybody had asked, burning questions.